A rate cutting cycle is upcoming. Both US stocks and gold are expected to rise. And then the AI bubble seems to continue to inflate. So, what can we do for ordinary investors? What's going on in 2026? What should we do? And how should we prepare? In this video, let's discuss both opportunities and potential risks. Hi everyone, I'm Stevens. It's December 17, 2025. We've just days away from 2026. And can you feel it? The world feels completely different already. The tide is turning. Layoffs, financial crisis, debt default, bankruptcies, regional conflict, trade and tariff wars, AI exploding, gold, stock, and Bitcoin hitting all-time high this year. The aging of society is intensifying. It's all hitting us like a tidal wave, and we are entering a low-desire society. So, as ordinary people, what should we exactly do in 2026? Where are the real opportunities and potential risks hiding? Let's start with gold, two huge signals. First, the Fed is likely to cut rates in 2026, which could send gold soaring. For this, some analysts are even predicting that gold price will hit $4,900 an ounce. Second, banking giant Morgan Stanley has moved its gold trading departments to Singapore. Here, not a partial, it's the entire department, over 50 members. It is said that there was no notification, no advance notes, no communication either. Don't you feel it's weird? Because physical delivery pressure in the United States is intense. Some analysts claim that tariffs pressure and Singapore offers zero import tariffs and friendly regulations plus access to BRICS markets. In November alone, $4 billion worth of gold was delivered there. What does this tell us? Which is, smart money is already moving. Next, AI and energy. This is the hidden game changer. AI is taking jobs, but there's what you might not know. ChatGPT handles 200 million requests daily, consuming over 500,000 kWh of electricity. What does it mean? Some experts claim that equivalent to the power consumption of 17,000 United States households. It's so obvious. If I ask, what's the code of AI? You will answer, computing power. It's obviously. And the code of computing power? It's power, energy, electricity. Global data center power demand is projected to jump from 49 GW or 1 million kilowatts in 2023 to 96 GW in 2026, and 95% of that growth is driven by AI. A single large AI data center can use as much power as 75,000 American households. So what does this mean? Traditional jobs will keep declining, while reliable, affordable electricity could become one of the most valuable sets in 2026. So there are three big certain opportunities here. 1. If you were a gold holder, don't shout out. This is a long-term investment for certainty, especially with global unstable circumstances. But don't invest for the sake of investing. And don't put all your eggs in one basket. If you really want to buy, you might consider some funds to gold-related investments. 2. If you wasn't a gold holder, don't worry, don't be anxious. We could focus on other precious metal investments, for instance, copper investment and silver investment. The expected rise in both of these two is directly related to gold. In addition, copper's expected rise still relates to high demand of electricity in terms of necessary of AI, for which is needed to electricity transmission. So copper is one of the most significant for power plant development according to its good electrical conductivity and mental mechanability, no matter what type of electricity, including wind power, hydropower, solar power, and nuclear power. 3. Investing in power plants or industries related to power generation. This is a very certain opportunity next year and even over the next 10 years, because global electricity demand will continue to rise due to high developing of AI industry. But there are still three big uncertainties ahead. 1. Will the AI bubble burst, like the dot-com bubble in the 90s? 2. Could gold still rise or drop back? 3. Can US stocks keep rising? So Warren Buffett's been quietly buying more Google stocks. Read into that what you will. As for AI bubble, in my opinion, this bubble is bound to burst, especially since the current AI bubble is basically built up by hardware computing power. Artificial intelligence experts have also said that this simple and brute force method is not the optimal solution. Moreover, the bursting of this bubble might resemble the collapse of the dot-com bubble in the 1990s, starting with a sharp drop in stock prices. My perspective on gold market momentum is that it will rise, but the fluctuations will be huge. I'm not exaggerating. We can have a quick look at the price curve chart of gold. The price of gold has risen by a staggering 63% from $2,625 per ounce in 2024 to $4,300. It's certain that many major international sellers will be dumping their holdings in the near future. That's why I said before, just be patient. It's absolutely not a good timing to buy now. If you were not a holder of gold due to its probable huge fluctuations. In other words, it's in a phase where the risks outweigh the rewards for those who want to buy currently. Also, it's very difficult to guarantee that Wall Street analysts are trying to attract more gold buyers for their employers so they can sell more easily by their so-called bullish market trends of viewpoints. So, any investment decision must be made with absolutely care and requires thorough data analysis and foresight. Personally, when it comes to US stock, I have to say, if you are expecting about getting rich overnight through stocks, but the timing. For those who want to hold stocks in a long term, it is recommended to only consider Magnificent 7, that is Microsoft, Amazon, Google, Apple, and the last one, Tesla. Of course, if you don't want your funds to be exposed to risk, you can hold cash. And I think holding cash is a strategy at this stage. Hold more cash and wait for the right time to buy at the bottom. Or you can follow Buffett's investment strategy, buy Google stock. But most importantly, what you need to keep in mind is the fund used must be long-term funds. So listen up, here's my straightforward advice for 2026. 4 things to hold off on. Don't buy or upgrade your house unless absolutely necessary. Don't buy or change your car. Avoid debt where possible. Don't lend money casually since cash flow is king. Don't jump into starting a business cause it's too much uncertainty. And the one thing to do, hold cash and wait for a black swan, even in finance. When panic hits and markets drop, that's our chance to buy quality assets at the bottom. Guys, the more unpredictable things get, the more patience and rationality we need to have. In 2026, survival is winning. Catch one real opportunity and it could change your game. To wait patiently or to move aggressively, read into that what you will. At the end, to quote a classic sentence from 0 to 1, written by Peter Thiel, co-founder of PayPal. No one can predict the future exactly, but we know 2 things. It's going to be different and it must be rooted in today's world. Alright, I will keep tracking these trends for you. Hopefully the content is helpful. If you enjoyed this video, please remember to smash a like and subscribe so you will watch all the other videos that I put out and have recorded on my channel as well. Thank you guys for watching. See you next.